The small cap space, which is now continuously soaring at record high levels. Just a few months back, there was a lot of clamor about a lot of froth existing in the mid and the small cap space. Even the funds were asked to not take lump sum money for some bit of time as well. A little bit of consolidation, and again, we are seeing small cap stocks at record high levels. They recovered 20-30% odd within the index also from their lows. How are you really looking at this space right now? Do you think a lot of the froth has been taken out? Can one really look at this afresh, or do you think still a lot of risk persists here, sir?
So my reading says actually the valuation wise, many of these companies are actually, I think, once again scaled back to its previous highs, and to a greater extent, I think that is a cause for concern also, because on one side you have the ability to execute, which is limited. On the other side, the market is giving you the premium for growth, which is not going to happen, I think, in a shorter period of time. It's going to take a longer period of time. So one we have to be extremely mindful about the entire process, I think, which is happening currently. As I see the typical habit of the trader out here, on one side you are having the new IPOs coming in, so he requires money to put into those IPOs. On the other side, this scarce liquidity-driven small cap stocks are available in the market, where I think probably you can make quicker money by taking the larger positions. And in turn, I think fund your IPO related activities. So this is a typical shift which is happening from the small cap to the IPO at this point of time. And that's where I guess I think the momentum is driving the stock prices. One will have to be careful about the valuation which they are buying. If you end up buying at a wrong valuation, probably I think the wait is going to be very, very long, even if the businesses are good from the long term perspective.
Shabani, within the small caps which are consistently at record highs, which are the pockets that still appeal of value to you? Are you really looking at this space even after the recovery has taken place over the last 1 month odd or so? Do you still find enough opportunities here?
Yeah, so our approach to small caps has been very, very stock specific. If you look at it from a headline valuation perspective, headline valuation for small cap, and you look at the index on a 1 year forward price to earnings, the index is trading at about 20-25% premium to its long term averages. So, at a headline level, yes, valuations are expensive. And the other factor, as we were earlier discussing, is that earnings delivery in the last quarter for small caps has been much below expectations. So, therefore, one has to keep that in mind as well. There are three key things that we are looking at when we are looking at mid and small caps as a pack. We are looking at companies where there is visibility of earnings growth over the next couple of years. The second factor is that we are looking at companies where valuations are reasonable as compared to companies where valuations are stretched, and therefore earnings and valuations have to go hand in hand. And the third factor is that we are looking at companies where the free float is fairly large and therefore liquidity is available, as opposed to companies where free float is small, and therefore those companies may have moved up and fundamentals have not kept up with valuation. So, overall, we believe that from a risk reward perspective, large caps continue to be better placed than mid and small caps.